Have you been attempting day trading and struggling with getting results and don't really know what you're getting wrong? You've been trying, you've been searching information, but you just keep on struggling. You've come to the right place, my friends, because after you've watched this video, you will instantly become a better trader. So, you're a few weeks in your day trading career and you've seen your portfolio going through some very violent roller coaster rides. Well, rest assured, I have been in the same shoes as you when I began trading. I would make massive profits one day where I would dance on the table as I was thinking I would become a millionaire within just a few weeks and that sweet Bugatti would be in my possession very, very soon. Well, of course, I would see all the profits that I made one day evaporate only just the next day. Of course, you'll probably see it coming already. The profits that I would make one day would simply evaporate the next day. And by the end of the month, my whole trading account was down just by only 80%. So yes, it was a struggle in the first year when I started out as a complete beginner. At times it even felt so unrewarding that I felt like I was gambling and I seriously questioned why I decided to pursue my career as a trader. Now, 5 years later, I have been trading as a full-time day trader and I can finally reflect on every single mistake I've made in the past. I have made these mistakes countless times when I was starting out. So in a way, you could say I have made them for you, so you don't have to make them yourself. So one of the largest mistakes you can possibly make is simply not having a plan. Seeing price move into a certain direction that makes you convinced that price is making a move. You do not want to miss out on those sweet gains and you decide to jump into the trade right away and enjoy the ride. That moment right there is already a massive mistake because what's the reason you are in the trade in the first place? One thing to really understand in trading is that the workload lies in its preparation and not in its execution. Preparing your trade allows you to make an informed decision and plan the trade ahead of time. If you're not able to explain to yourself why did you took the trade, why did you enter into the trade in the first place, where you are trading it to, and where, most importantly, actually, where you are wrong. If you're not really able to explain to yourself why did you enter into a trade, where are you trading it to, where are you looking to take profits, and where your trading idea has been wrong, it really is not that much different from actually gambling. Sure, you can win a few trades in this way, but it is simply impossible to become consistently profitable over time. And as a trader, that's what you're aiming for. If you want to really make it as a day trader, you will want to be able to do this day in, day out, and you want to be consistent in your results. Therefore, plan your trades before actually taking the trade. Know where you want to get in, what are the reasons for getting involved, what is your target, and where are you wrong? Where are you going to cut your losses? The second mistake is overtrading, one that I have definitely been guilty of a lot in the past. This is a commonly made mistake because most traders that are starting out are focused on making those sweet gains, instead of actually trading the plan and focusing on the charts. Imagine this. You've made a few good trades on the day so far. $50 here, $200 there, $100 here, and another $250 here. And on your screen, you see a nice green number telling you that you've made $670 for the day. You're doing pretty decent so far and feel good about it. But you really want to hit that final goal of $750 for today. So instead of taking a break and appreciate the results so far, you keep on trading. You start entering trades that maybe are not necessarily optimal or maybe that you haven't planned out in advance. And instead of winning more trades, you instead lose some instead. That $670 then went down to $500 and then ultimately to $150. At this point, you're getting emotional, and this is where trading quickly turns into revenge trading. You're now taking trades without having a plan at all, hoping to make back those profits that you were having just a few hours prior to this. This is where things can quickly go south, and I think we all know how the story ends. By the end of the day, you're down by $800, where originally you would have a profitable day. That right there, ladies and gentlemen, sums up pretty much my first year of trading. I knew how to make money in a market, but I was unable to keep it. Greed and emotions quickly get in the way. Therefore, the tip I can give you to avoid this is think in percentages rather than in dollar value. It will detach you from the value itself and view things in a more relative way. Secondly, when feeling emotional, take a break from trading. Have a lunch, go for a walk, or go to the gym, have a workout, spend some time with some friends and family. This helps you come back with a fresh mind, and once you start getting back to the charts, you will see it for what it is, and you will have a clear and fresh overview on what's going on, unbiased, and you can simply continue to trade. Mistake number 3, not taking the loss. The single most devastating thing you can make is not cutting your losses on time. Something that I also have done a countless of times. It feels great to have a trade in profits, but when the trade does not work out the way that you originally planned for, it can be very difficult to take the loss and accept the fact that you've lost money. The most important thing to know beforehand is how much money are you willing to risk for a specific trade. In that way, you are aware of what is at stake, and the potential loss you would be making if you're wrong on the trade is responsible and justified. Knowing beforehand what is at stake helps you prevent from making losses that are so large that damages your portfolio beyond repair. That is step number 1 in risk management. Step number 2, and equally important, is actually taking the loss. If you do not do this, then the trade quickly turns into a gamble. It's easy to think that price will turn around and you can get out of the trade break even. But in practice, this probably will not work out very well if you're a beginner. It is much more likely that when you do see price turn around and gets around your break even point, you will start believing you are right on the trade after all, and you might be making profits instead. The truth is, however, that at this point your trade setup is already skewed, as price already invalidated your original setup and the new data printed by the chart gave new levels to trade from. At this point, your planned trade has turned into a gamble, and the only reason you're still in the trade is that you will hope that it will end well for you. The markets do not really care for you, and they are ruthless. Therefore, being unable to cut a loss can result in total devastation of your portfolio. Avoid it. However, if you take a loss that was actually calculated in the first place into the trade idea, the moment you take that loss gives you actually full control over your capital again, that you can use for a new trading idea where you can actually make up for the loss instead, as long as you keep them calculated and small. A little bonus one has more to do a little bit with expectation management, but I found it very useful to put it into this video anyway. Expect to pay tuition fee to the market. Realize that trading is something that can pay off really massively on the long term. Set realistic expectations for yourself. Do not expect to become a millionaire within your first few weeks of trading if you've never done so before. Know that even the best traders started out as losing traders. Through practice, persistence, and dedication, they ultimately knew how the markets operate, develop their strategies, and manage to become consistent winners. Expect to make losses when starting out. Therefore, it would be worth considering your initial starting capital to be used as tuition fee. The losses that you will make will cost you. In exchange for that, you will actually receive experience. It's important to outlast the losses long enough and give yourself time to learn and develop. Keeping your losses small, no matter how many, will give you this time to develop and get the experience you need to develop yourself as a trader. Use that time and capital wisely. Are you looking for a more practical example of how I took a loss and how I recovered from it and how I dealt with that? Then watch this video next.